The following is a presentation of TFNN. The Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom O'Brien and Tommy O'Brien.
Welcome, folks. We appreciate you growling and prowling with us out here this morning. Right now, we have the Dow Industrials down 5. You get the NASDAQ down 20. S&Ps are off $1.50. We have the gold contract up 80 cents, trading at $1,324. Silver's up 12 cents at $19.25. Oil's up 10 cents, $47.15. How about that oil move yesterday, right?
Crazy. I came into your office late. You see that oil, right?
Amazing.
Yeah.
Notes, the 10-year note up 3 ticks, down 3 ticks rather, 131.10. 30-year bond off a half a point, 15 ticks, 168.25. You get King Dollar up 94 ticks, 95.43. And bottom line is that volatility is still out here. And what's going to get kind of intriguing here is that inside the NDX 100, that thing, the futures, they're jumping around like a little wildfire right now. They were down 10, then they're down 20, now they're only down 18. But Apple's not the leader there. You get the IBB, but Apple is getting hit a little,
yeah,
so
Apple's
is the
down
IBB.
over $1, right? I mean, that's a decent move for Apple, for sure.
Now, folks, let's go over to our man, Mr. Kevin Hinks from TD Ameritrade Thinkorswim. And every trading day, right here at 12 o'clock at TFNN, no matter where you are in the world, folks, right on your cell phone, TFNN.com, hit Tiger TV. Kevin and Scott have a great show, swim lessons. You want to understand options upside down. Bottom line, it's free. It's great education. It's amazing platform.
You got earnings happening. You got volatility happening.
You got it all above. Kevin Hinks, what's going on?
Good morning, Cam. Good morning, Tommy. Happy Thursday, guys. How's everything going?
Happy Thursday. And, after, yesterday, Kevin, when you were saying, it's so wild, too, that we had 7 Fed presidents or Fed governors out speaking, right? I was cracking up, man, because one after the other,
You just kept hearing from them.
They just kept hearing from them. And this morning, they're still out here.
I was just seeing somebody saying that the November hike the November meeting has to stay live.
Yeah, it's like amazing.
I didn't even say anything, but in my head, I was looking at that headline saying, really? Come on. The goal of the Fed is not to freak everybody out. Jacking rates right before the election is probably going to add volatility. Anybody can do that.
Oh.
Yeah.
For sure, man.
I'll tell you, Tommy, I hear these things, right? I hear some of the noise.
Yes.
Like, keep a November Fed meeting live.
Exactly.
Right? And OPEC's going to reach a deal.
That's another one, right? Yeah.
And all I flash back to is my youth of Lucy and Charlie Brown and that football.
Oh, that's awesome.
Falling for it every time, right, man? Same deal, yeah.
Right. They're going to pull that football out every time, and we fall for it every time. Don't fall for it. Don't listen to the noise out of OPEC.
It's a good analogy, man. When it comes to this one, for sure.
It's a great analogy because you know what the sad part is.
It all relates back to Charlie Brown, man.
It relates to Charlie Brown, and they really think do they think they were that ignorant? And evidently,
I think they do, Tom.
Right. Yeah, I mean, because it's so continual, it's unbelievable. I mean, it's like, wow. And
Tom, I have said this to my high school-age children. Do you think you're smart and I'm stupid? Is that what this is, why you're trying to get away with this? And sometimes I feel like this is what these people are doing, right?
Yeah.
They think we don't get it.
Right. That's my take on it. I mean, it's like, wow, man. I guess, they know that they push around markets. That's the bottom line. And things have changed so dramatically in the last 20 years. It's pretty amazing, actually,
Right. You're exactly right, Tom. Think about this. Whether you believe in the OPEC news or not, you still got to trade that market.
Oh, yeah.
Right? I mean, I know that from the grains. I mean, a rumor will come out of South America or something, and it doesn't matter if it's true or not. You have to trade it.
That's the number. Yeah, exactly.
Right. If that costs you money, then it's real.
There's no doubt. And even I was feeling for people, in that oil market yesterday because I was saying, wow, man, you talk about a spike. That
market was a ripper.
Oh,
$3 to the upside.
They took people out in the stretcher on that one, man. That was pretty intense. Yeah, right.
But that's what can happen, especially in the commodities market where rumors and rhetoric can really move these markets. Yeah. And they get thin when that happens.
They do. And what's amazing? It's like I wonder many times is that some news events really move them than others that just don't do anything. But like that one yesterday just really ramped it up. And then the ironic part, folks, was this. When the rumor came out, the reduction was 750,000 barrels a day. The actual statement came out at 4 o'clock. And then even after the statement, they still couldn't get them to actually put it in writing what it was. Then it come out that, okay, they're going to get it done by November 30th.
Okay.
Yeah.
And then this morning, it came out that now they're at 500,000 barrels.
Oh, boy.
Exactly.
Right. Come on.
Oh.
It's like trying to nail Jell-O to the wall. No one can get this right. No one knows how to do this.
I'm telling you.
You got a bunch of people with their own self-interest, which is the best way to find the best price. Everyone acting in their own self-interest, but they're trying to group it all together. It just doesn't work.
Right. No.
Right here, folks, 12 to 1 Eastern Standard Time, and that's why you want to trade options, folks, for defined risk, okay? Because the reality is that we're in a very uncertain market and time frame right now. There's no doubt. Kevin, you have a great one, a safe one. We look forward to the show at noontime.
Always a pleasure, guys. Have a good day.
Thank you. Stay right there, folks. Tommy and I are coming right back. Dow's down 13.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated folic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. We take your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We have the Dow Industrials right now down 6. You get the Nasdaq off 21. S&Ps are off 2. Gold is flat out there. Silver's up 8 cents. And this market's trying to make highs out here.
Yeah, we're right at basically where we closed at yesterday, right?
Yeah.
But we have some volatility. I don't think it necessarily means we're going to end there. So we'll
no.
see. Yeah.
And in fact, let's go over and we'll take a look at first we'll take a look at the Dow Industrials. So inside the Dow Industrials, strength versus the weakness. You have Caterpillar. That was the strongest one yesterday, too. That's up 2.3%. $1.99. IBM's up 0.8. Disney's up 0.7. Taken away from it is Merck down 1.3. Apple is down 1.1. Procter & Gamble's off 0.8, and Johnson & Johnson is down 0.7. If we go back to Apple for a second, because Apple will not only affect the Dow, the S&P, and the Nasdaq and the Index 100. We'll see how Apple's going to go after this $111.55. Right now, you're down $1.18. That's not the end of the world.
Yeah.
Inside the NDX 100. Now, there's sellers inside the NDX 100. It doesn't, it's interesting that it's not like it pops up right in front of us with either leaders or the laggards, but you have eBay is up 3%. Expedia is up 1.8. Western Digital is up 1.6, and Viacom's up 1.5. The Viacom deal, folks, they want to put Viacom and CBS back together, and that's going to happen because National Amusements actually is the largest owner, is the holding company for both of those companies, and that's where Sumner
Redstone.
Thank you, Sumner Redstone. He separated them 10 years ago.
Okay.
Mylan Pharmaceutical is down 2.8%. You get Yahoo down 1.9. Alexa Pharmaceutical is down 1.8. And Dollar Tree is down 1.5. If we go into the IBB, this is putting some pressure on the NDX as well as the composite. That's down 341. Now, the IBB, bottom line is going to need a lot more volume to get to lower price, but it looks like, it's starting to head down. So today's a big day because you have the market got into that gap from the downdraft Monday, closed above it. It's like, okay, now what are you going to do about the September 9th one? Because the September 9th one inside the S&P and the Dow is very large, but the Nasdaq's above it.
Yeah.
So either the Nasdaq's going to pull it up or the S&Ps and the Dow are going to pull it down. Isn't that wicked?
Yeah. Because they're all correlated, that's for sure.
They are. It's like one big hangout. You're hanging out with your friends, and one goes one way, and it's like, okay, are you coming back, or am I going up?
You get it.
And of course, it's Thursday.
You got it, man.
And what's Thursday?
You tell me. What am I pulling up?
Gas.
You got
Natural gas, folks. Natural gas. That's what we have. Thursday, 10:30 a.m. And yesterday, man, that oil market.
Yeah, now we were looking at the 11 a.m.s, right?
Yeah, we were.
So the reversal would not have happened there. But sometimes the 11 a.m.s don't line up as they should, and you can buy the 230s.
I've traded the 230s.
Yeah, right.
Yeah.
And that would have been an opportunity where you really would have gotten almost the full side of one side of the spread, and if you had timed it well enough, to take off when you had maybe 70 cents on the dollar of equity in that one side, take that off, and then the other side you would have gotten full value.
That would have been insane.
It would have.
It's
And that's sometimes those type of moves. I was thinking, on the spread, sometimes you'll see where you have like $1.50 to now the 230s have $5 oil spreads, right? So sometimes there'll be where you have like $1 risk to $4 of profit potential.
Right.
And when that happens, you're not paying a lot of premium because there's not a high likelihood that the market's pricing in that you're ever going to make that full $4. So there's not a lot of premium because so rarely can the market move that much in that time frame.
Dude.
But yesterday's a perfect example when when you're going to make those trades with spreads, you might only have to pay like 2 to 3 pennies to get where you're risking $1.50 in oil to make $3.50. And it's because so rarely is it going to move more than $1.50 in each direction. So your risk versus your reward is pretty much at 99% of the time equal, so there's not much premium. But yeah, as we see yesterday.
And, well, the biggest one I ever got was about 2.5 months ago. I paid 67 cents, and I got $2.50. And I thought I was King Kong. You know what I mean? But
for oil? I'm sorry, paying 67 cents. Where
it was I put up 67 cents. Okay. It was a $5 spread. Oil ended up going up $2.50, $2.75 at the end of the day, and that was the biggest one that ever hit. And
it's a huge move.
And I wasn't expecting that. I mean, it was,
Sure, right.
And it's like, okay.
And you probably didn't pay that much premium because the market wouldn't be expecting it either.
I was just trading that to trade it, instead of trading the future. Because what ended up happening is that it was, the volatility wasn't there, and then all of a sudden it came in.
Right. That's how it has to happen.
Right.
That's why it's so rare. But yeah, all right. So getting back to natural gas. So right now I just jumped to the 11 a.m. spread. So let's see. Maybe we'll have to refresh. Just as we pull this up, the indicative index is not loading here. So we'll have to take a look at what's going on exactly. Maybe we can pull it up even during the break. I'm not sure. So for some reason, natural gas we're looking at. Let me just take a quick peek at different contracts. Yeah, but for some reason this index isn't loading. Now, I'm not sure why that would be. We're looking at the November futures contract, but that's not operating as it should be right now, I don't think.
I'll pull up UNG. Let me see what's happening here. So right now, this will be interesting. So UNG's flat. So CRB, this will give me an idea. This is delayed also.
Sure. Is that 15-minute delayed?
Yeah.
Okay.
At least.
That's not as big of a deal right now.
Right.
When the news breaks, of course, it'll mean.
So right now we're 297 on the November contract.
Okay.
And
quite a consolidation between that 280 and 310, right? Going all the way back to May. Yeah.
And if you look at this, it might take this would be a sell. And what's going on here? Yesterday, folks, as this came down, it traded from 304 to 294, and did 138,000 contracts. That's a big expansion of volume on the way down. And it's been in this zone for a while. That these folks that have been selling it at $3 and $3.10 have been doing all right. And it almost looked like it was going to go, hit 316 last week, right?
Yes.
And let's see, 1, 2, 3.
Yeah, that was 7-8 days ago.
Yeah.
It was actually a full week ago.
Yeah.
Now, 22nd. Today's 29th.
Okay.
So 7 days ago, last Thursday.
So this will be intriguing watching how this thing does shake out. If we go over to that oil contract again, let's just look at oil for a second, because CLX. So with oil, folks, what oil has not done yet, which, in my take, that it has to do in order to get, much higher, it has to take out that swing point. And this is almost the same type of setup that gold has done. It's like it gets these large signs of strength.
September 8th, you're looking at.
Yeah, and then, guess what? That swing point's laying out there, man. It has, in order to get higher, right now, you still get 5 lower highs in the oil market. So it's like, man, okay, if you're gonna do it, you got to do it now. And that news this morning when I started reading it, I just
about the OPEC deal.
It just blew my mind. When I was just coming in, I just came from St. Pete, right? And I heard 500,000 barrels oil, and it's like, well,
now it all means
what
nothing.
happened with that 250,000? Where'd that go?
Right.
You stay right there, folks. Tommy and I are going to be coming back. We're coming back with those gas numbers for you. Right back.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Focus Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 6 equally weighted commodities, including gold, silver, copper, nickel, soybeans, and sugar, in one powerful CD. With annual pricing caps of 50% per component, you could earn up to a 50% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The October 13th funding deadline will be here before you know it. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So the EIA says U.S. natural gas stockpiles rose by 49 BCF, billion cubic feet, right? Is that what it is?
Yep.
And the Bloomberg estimate was 53.
Yeah, so a little bit less inventory than they thought, which is probably going to mean a rise in price. And, I'm not sure what's going on, unfortunately, with Nadex, but what happens occasionally, and this they will correct it, I'm not sure, maybe just this indicative is not flowing in here, but the market's still live.
Yes.
And so I can just take a quick grasp, and this is just the 290 to 310 spread. 3 would be the exact middle. So it jumped from about 297 to around 3, just above that. So 3 pennies,
right?
Which is a decent move.
And natural gas, it definitely is, right?
And we're actually almost about to reach 301, just above. So maybe 4 pennies.
If we go over to that UNG, just take a look at the ETF structure for it. There you go.
Yeah.
Look at that move. So it just went from 848 to 864.
Yeah.
It's getting into that gap, and now this is where I kind of like this deal, and this is what the deal would be. Is so what happens, folks, is that you get it up into this gap. So let's see, 869. You're at 864, and this is where, as a defined risk, you could turn around and sell one side of that. Meaning, my take on this is that natural gas is going to go fill that gap and then give it up.
Okay.
So you get a spike like that, it'd be pretty neat. Now that one there I wouldn't go to the 11 o'clock one. I'd go till. Can you just take a look at those again? Is natural gas 230 or 130, or is it?
I think it's
230. Okay, cool. Yeah. Okay, so in the energy market, natural gas and oil's to 230.
Yes.
The metals market is 130. That's good to know.
Yeah.
Because yesterday, what did happen is that oil market moved to 10 past 2.
Yeah, and yes. Yeah. So it was still part of the day's trade.
It was. Sure. Imagine you're sitting there and you think you're flat, and then all of a sudden, bang, you're up $2.
It had been climbing almost the whole.
Yeah, no.
From like 11 a.m. though, it wasn't. You know what I mean?
No, it had.
Right from 11, it was like 45-degree angle, and the final 40 or 50 cents was kind of right around that time. It was already up almost $2 from its low when we got off the program at 11 a.m. prior to 2 o'clock.
Yeah, no, there's no doubt. Yeah. If you take a look at this, you're going to see.
That's so it wasn't really 2 o'clock where you started jumping for joy. It was you had already been $2 of rise. That's all,
Yeah, because the low of the day was 44.35. Yeah. At 2 o'clock, it was at 45.81.
Yeah.
And then at 2:30, it was at 47.45. So look at that. So that close was big.
Yeah.
That's intense.
Definitely.
That was quite a close. No two ways about that.
Yeah. Get a $1.40 rise in the final half hour or so.
Huge.
Yeah.
If we go over and we take a look at the 10-year right now, this is going to be really tricky, and this is what it is, folks. So the 10-year and the 30-year, got into the downdraft from the 8th of September. The 131.14, and bottom line is it failed on price and volume. So it's like, okay, is that all it's going to be able to do? And are we going to get back down to the lower end of this, which is 129.26? And it's a tough call right now. I just want to see how these trades for the next few hours. Thus far, it looks like we've done 110,000 contracts. That's a lot of contracts, man, for the 30-year. And you're going into 220. See, so thus far, I could make the case that no, that's about all this bond market's going to give once again. Yeah, it has a high volume intraday swing low. So if that would be the case, it would be the Fed's governors out there saying, okay, we think we're going to go up sooner rather than later again. And then the market turning around saying, okay, hold it. We better go up on rates sooner rather than later.
Yeah. Yeah.
It's really wild, man.
Yeah.
I mean, it's like.
I just see November being really tough for. And it's not for mischievous or conspiracy or anything. It's the role of the Fed is to provide stable environments. Right. So keep that in mind as it's not a conspiracy to say wait 1 month as we come into a new president for the first time in 8 years. That's called stability. So
right. And the.
Can you go back to those percentages? I just didn't see what. Yeah. Huge difference between the two meetings, obviously.
Yeah,
a lot of people, a lot of money is saying the same thing.
What we're looking at right now, folks, is the Fed funds rate for the probability of a hike. And in November 2nd, it's 17%.
Yeah.
December 14th, it's 57%.
Yeah.
What I listened again to what Yellen had to say. She was testifying yesterday, and she was testifying about community banks, not the rates, but they asked her about the rates again. And, when you actually hear what she says, she said that, yes, many of the governors felt that we should go up sooner rather than later and before the end of this year. And she said that she thought that may happen, and then she put the caveat in it.
Okay, sure.
And the caveat was great, folks. The caveat had to do not just with jobs and inflation. It had to do with any risk value across the world. And it was like, oh my God.
Yeah.
I mean,
that can be anything.
Guess what?
Yeah.
You wake up in the morning,
there's always
you're going to be
risk,
in risk.
Yeah.
Let's go to our man Tom in Plymouth. Hey Tom, what's going on, brother?
Hey, good morning, you guys.
How you doing?
Morning, Tom.
Oh, I'm doing okay, but I had a little birthday party for the friend last night, and wow.
Oh, I see.
I'm not as young as I used to be.
You need, listen, we're all not as young as you used to be. You can't shake it off like you're 30 years old, can you?
No.
That's all right.
I should have known better.
That's all right.
I have to ask you guys, too, how about those Patriots, huh?
Oh,
yeah.
Amazing. Absolutely amazing, no doubt. That's.
Yeah, I went to the game last Thursday, and
cool.
I realized I wasn't as young as I see again.
That had to be an awesome game, though, man. That was worth it, I'm sure.
It was it was fantastic.
I bet.
Oh, I had a blast.
You don't get to see
Anyway.
shutouts in the NFL very often.
Seriously, man. It's amazing. What are we going to look at today?
Well, so yesterday, you buy this thing at 22, 23, even 24. It goes up to 25, 26. You sell it. Today I jumped in again right off the bat, and I don't usually like to do it right off the bat in the morning, but I just nibbled a little bit. And I'm wondering what you think. Yesterday afternoon I wasn't watching, but that looks like a little bit of a shock out there.
Let's take a look at it. What he's talking about, folks, is JDST, which is the Direction Daily Junior Gold Miners Index Bear 3-time shares. It's the inverse correlation of the market vectors Junior Gold Miners Index. So, the bottom line, you trade this enough, Tom, to always make yourself better. This is your recuperation. Between this and the nugget, maybe this is your recuperation. Yeah.
Well, that could be next, I guess. I'm watching that one very closely, too.
Yeah, you stay right there. Tommy and I are going to be coming right back, folks. We got Tom from Plymouth, and we want to hear from you. Our phone number is 877-927-6648. Going to be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. We have the Dow right now flat. Nasdaq's down 17. S&P's are flat. We're talking with Tom from Plymouth. and we're talking about the JDST, which Tom is trading at now. So you bought this again this morning, Tom?
Yeah, just a little bit. I wasn't quite too sure of. I don't have that same feeling I had yesterday, so I don't know. It treated me very well, so I can't. I mean, it's going to come to an end at some point, but I think I just want to get your take on it, see what you think.
I think you get good action, and this is what it is. So I'm going to do the correlation, the inverse correlation to this, which is the GDXJ. That's the inverse. And if you take a look at this, what you're going to see is this. Yesterday it tried to get to higher price, but what you actually did is that you had a lower low with high volume. And it looks to me like out here today, and this is deviant, and this market has been deviant in a big way, folks, meaning the miners. But they haven't been able to get to higher highs. So I think you're going to have some action here. And most of it, technically it's set up to get a lower price, meaning then your JDST goes to higher price. Now let me show you something else out here. What's cool about the markets in general, folks, okay, there's a takeover in Canada today that Kirkland Lake has taken over New Market Gold. And if you bring these up, what you're going to see is that the candidate that's getting taken over,
NMI.
Thank you, NMI, is not getting any juice. And that's a problem. It's up 8 pennies. And so it's with this now. This is a good stock. Okay, it used to be an exploration stock. Now they've been a producer the last couple of years, and it's certainly has gone up dramatically. But that's it. It's like, okay, so this is fairly valued. So when I saw this morning come across the Bloomberg, I says, oh, this is going to be interesting.
Yeah, I mean, it's up 500% in the last year and a half. So that's what the market's saying.
That's what the market's saying.
That's good for now.
And that's what the gold and silver equities had also done from January through
such
July.
big rises. That's what I was gonna say.
And so it's like, okay, man, it's still time for a pullback. So I think you're in good shape, man. Just put that stop in underneath them, man, and you go from there. Because you trade these enough to know that there's no doubt when you started the conversation off, it seems that every day you can get a fluctuation of 2 to 2.5 points, and when you're trading it, that's great. Just you're in, you're out, put the stops in, and go from there. Let it stop you out. Cooking, brother.
Yeah, that's great advice. Thanks, guys.
Okay, Tom.
Take a few aspirin too. You'll be all set.
And enjoy that Patriots game this weekend.
Yeah. Who are they playing this weekend?
They're playing. Who are they? The Bills. They're right. Yeah, they're playing the Bills and the Ryans. I think.
Oh, big. Okay.
Yeah, that should be interesting.
Totally. Have a great one, Tom. Have a safe one. The Nasdaq, you got the composite down 21. The Nasdaq's NDX is off down 19.
Can you take a look at UNG for
Absolutely.
the
UNG. Let's see what
gas has done.
This good old gas market's done. There she goes.
As we know, I mean, that first move is always a big one, but it always has moves after it. And we got all the way up to
869.
865.
Okay.
And then the next bar, we're back down to 856. I mean, just 10 penny. There's some oscillation for sure.
Yeah, it's gonna be wild watching this whole thing shake out, in this energy market in general. One of the questions in the den is that can you tell us if window dressing applies through the end of September? Yeah, we're in window dressing right now, folks. Every quarter makes a difference, because what happens at the end of a quarter is that you have the funds that try to basically, let's say they get winning positions. Well, what they try to do at that particular point is that they'll try to buy a little bit more winning positions. They're losing positions, they try to move out, because then for funds, you talk about pressure. I mean, every quarter is pressure. You know what I mean? And then the first 2 days of the new quarter, because so many people have IRAs or pensions and that money comes out automatically, then that goes into the marketplace, and it's a natural buy, because management firms, mutual funds, no one gets paid in cash.
Sure.
If it's kept in cash, the broker dealers and the banks don't get paid. So most of the time, you're going to see it put to work. That being said, what does happen, as I said the last couple of days, is that I've seen, you see window breaking during these times too, but it's very unusual. Most of the time, the bias is there. I suspect what's going to happen, because this year has been so tough for money managers in general, is that, like, if someone's up, they're going to have to make a decision that, okay, if I'm up like 4 or 5% right now, do I want to flatten out for the rest of the year?
Sure, and lock that in.
And say that, okay, I'm up, because if there's any type of pullback,
be a good number to post.
It'll be a huge number to post. I heard a number this morning, so listen to this, folks. This is pretty amazing. Howard Marks, who's the CEO of Oak Tree Capital.
Okay.
He was on Bloomberg, and how he broke it down was amazing, because the large pension funds that owe people a lot of money, the states, over the course of years, they're figuring that they're going to make 7.5% every year in order to pay that liability out, right? And when he was breaking down the marketplace, just in the last 10 years, it was amazing that he was talking that if you can make 5.5%, you're making so much more over what the market has been giving. And what he's talking about is that he's talking about, a portfolio that has bonds and equities in it.
Okay.
So supposedly, if you're in a longer-term portfolio, you're supposed to have so many bonds, so many stocks. And bottom line is, you're saying, hey, listen, the environment we've been in for over 10 years, if you're making 5.5%, you're making much more than everyone else is making on a consistent basis.
I would like to see the numbers on that, to put it. I mean, the stock market just went up like almost 100%, and I'm just, that's all. I'd just like to see how that works out, because it would be the allocation to make that work.
Right.
I mean, if you were in the market in the last 10 years, you're probably making more than 5% annually, or you're probably not a happy camper with your financial advisor.
I'm
just to put it,
for sure.
so to throw that out.
I can see what you're saying, for sure, because if we bring up the SPY right now, the SPY's at, I'll put it at
10 years back.
I'll put it at 10, yeah.
Going back, but he is going, so this is where he's going back 10 years, though. So this is where he's drawing it from. Yeah, and that's fair, saying from 135 to 216. So what is that, 80 points from 136? I mean, you could be, if you're crushing 5% every single year, be up as much. You could. That would be doing 5% during all these years, though, and then doing it here as well.
Right.
Which is tough in its same right.
Is that a lot or a little? That's what I'm trying to figure out.
That's a lot. That's what I'm saying. 5.5% every single year is a lot when you have to do it during these years.
Right. No, I know. But that number works then, right? I mean, that's what
it could. That's what I'm saying. Yeah. If you started from here, it could.
Right.
Yeah.
You stay right there, folks. Tommy and I come right back.
My only point was, though, you're starting it from there. You have to be making that 5.5% as the market's like crashing. That's why it's a tough thing to say.
Stay right there. Tommy and I come right back, folks.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of The Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow right now is down 15. You get the Nasdaq off 19. S&Ps are off 2. And, we'll see where this market wants to go here. There's not much pressure on it.
Yeah, it's just kind of been floating around 10, 20 Dow points the whole hour.
Imagine we're going into October.
I know. Pretty crazy.
That's a mind blow.
It is.
There's no doubt. Let's go take a look at that gold contract. So gold, right now, well, it's going to get interesting. So gold, it hasn't had a lot of movement. We've gone from 1329. We're at 1321. We have a high volume spike at that 1321. So I expect that's going to get tested, and we'll see how this is going to shake out, because it should get quite a bit of support at 1310. 1310 is where we broke topside from on the 21st. Let's go to Steve in Nashville. Hey, Steve, what's going on?
Hey, guys, how are you?
Doing great, man.
A little fun fact, first of all, it's National Coffee Day.
Oh!
I saw that, actually, at Starbucks this
National
morning.
Coffee Day, and Americans spend approximately $40 billion every year on coffee.
Really?
That I believe.
40 billion with a B, yeah. And then New York City drinks 7 times more coffee than any other city.
Well, so check this out. I was at a fundraiser this morning for Habitat for Humanity, right? And when they were raising money, they brought up the aspect of, if you give $1,000 a year for 3 years, that's only having 1 cup of coffee at Starbucks in the morning. Isn't that funny?
That is.
It's funny when you break it down like that.
Is.
Right.
Starbucks is the enemy. All the way.
I love you, man. He's so funny.
Just a bellwether stock, GE, was wondering what that might be looking
I think GE's in trouble, man. I mean, GE can't get out of its own way. The low's 24, the high's 33. This is just laying at its lows, So, it's thus far, it hasn't broken them. I mean, it just looks like it's a consolidation that's been out there for, well, we can go all the way back to October of 2015. And we'll just see.
Yeah.
I wouldn't be buying it. I mean, I think that low will get tested. If the 29.42 gets tested with light volume, then you'd wait for a sign of strength. But thus far, it's not showing strength out here.
Yeah, it's got those $2 and $3 swings every few months.
It does. It does.
Yeah. All right. Well, hey, thank you very much for that, and go have a coffee.
That's a beautiful thing. I'll get that. Tommy got one this morning. I got my double
We're all
espresso.
set.
I like it.
Totally.
All right, we'll talk to you soon. Thank you.
Okay, man.
Take care,
Have a
Steve.
great one, Steve. Have a safe one. $40 billion in coffee.
Yeah, I believe it.
I do too. I spend a lot of money on coffee.
We all see the lines.
Right.
If you drink coffee at Starbucks, whether it's Starbucks, Dunkin' Donuts, Panera, everyone loves coffee.
Kawa. We get a new Kawa. Listen, folks, you stay right there. We get our man, Mr. Basil.
Kawa coffee.
Kawa coffee, Kawa coffee.
I don't know if everybody knew what you were talking about there, but good.
Our man, Mr. Basil Chapman, is going to be coming up next, growling a prowl with you. Then we're going to go to swim lessons in Chicago. We got Steve Rhodes coming up, 1 to 2, Dave White. I'll be back 3 to 5. And, of course, on Tuesdays and Thursdays, we've got our man, Mr. Andy Hecht.
I think Andy Hecht is taking care of some business this
afternoon. Is he? Okay.
So you'll close us out from 3 to 5 today.
We will close it out with 3 to 5. And bottom line is that we'll see where these bonds want to go. The bonds are still flat, man. So it's not time to...
How about UNG? One final quick look.
UNG, absolutely. The gas market. Let's see what it's doing.
No. Go much. We need a smaller... There we go.
Look at that.
Yeah, so it pulled back a little bit.
Yeah. Kind of flattened out like oil did yesterday. So...
now that would have been, I was just jumping around, that would have been one maybe, if you're taking both sides of it, we could have lost money there because it seems like not that big of a move.
Right. You stay right there, folks. Man, Mr. Basil Chapman's coming up next. Dow Industrials right now down 17. You got the NASDAQ off 18. S&Ps are off $1.50. Thanks, pal.
Thanks, man.
Have a great one, folks. Have a safe one. And, of course, stay right there for Basil. And I look forward to speaking to you this afternoon.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.